This morning, media and streaming giants, they have seen their stocks slam. Netflix down 54%, Disney and Paramount down 46% year to date, and our parent company, Comcast, down 31%. So what does that mean, and what does the next year hold for streamers? Julia Borston is here, live from Los Angeles. What do you think, Julia? What do we got?
Well, Andrew, so many questions here, but the big question is what kind of reckoning a potential recession will bring to streamers after a year in which the rules of the streaming wars totally change. Now, going into 2023, the focus is now on average revenue per user and profitability. That's replaced the chase for subscriber gains with ballooning content spend. Now, some big fears on the horizon. Morgan Stanley warns that streaming growth is slowing, projecting 2023 industry net additions at roughly half the 2021 pace, projecting consolidation of companies and services and cost rationalization. Now, speaking of consolidation, it's worth noting that Warner Brothers Discovery's combined service is set to launch this spring. Needham warns that Netflix's peak subscribers may be behind it because churn is rising for all streaming platforms. So what is it going to take to stem that churn, the rate in which people drop their services? Well, the focus now shifts to ad-supported lower-cost options, such as the ones that Netflix and Disney Plus launched in the past 2 months. Also drawing a spotlight, free ad-supported channels, which are nicknamed FAST channels, such as Pluto TV and the Roku channel, or Tubi, which is owned by Fox. My sources are asking when big streamers such as Netflix or Disney Plus might launch their own free ad-supported versions. An original Morning Consult survey conducted for CNBC found that half of Americans are interested in switching their streaming subscriptions to lower-cost ad-supported options, with millennials the most interested in discounted options. Morning Consult also found that the majority of consumers are expecting to spend the same amount of money on buying or renting movies at home as they spent this year. So we'll have to see how a downturn and how severe it is ends up impacting all of that entertainment spending. Andrew?
Julia, do we have any sense right now of what the sort of average American household, how many of these subscriptions they have and how many people think they ultimately will have? I was just saying I got a new TV, Julia, so I was literally having to put the password in to all the different subscriptions, and I realized I have like more than half a dozen of these things.
More than half a dozen. That's definitely more than the average. I have to go back and check the numbers, but I believe the most recent stat I saw was that there are about 5. But that 5 subscriptions, it could be a mix of ad-supported and then ad-free. So a service like Netflix or maybe something like Peacock, which you get access to through your pay TV provider. So somewhere between 3 and 5. But the number that people keep on coming up with, to me, is saying, people are going to end up having 3 services. But maybe those 3 services are a combination of some of the services that we know about now. There's also this question of whether, say, you get Hulu with live TV. So maybe that's how you access TV. That's your TV bundle, but you also get on-demand content with it. So there was this assumption that people are going to be paring back the number of services they pay for. But what we found in our Morning Consult poll is that people are going to be definitely thinking about trading down from an ad-free service to one that's a little cheaper and has ads, but maybe not so inclined to be slashing the number of services they pay for. One thing I'm really curious to watch, Andrew, is the box office. In past recessions, the box office has been incredibly resilient and even has benefited because going to the movies has been seen as such a sort of cost-efficient way to entertain yourself. But the question now is that going to be very different because people have so many streaming options at home?